Good day, traders. Stacey Burke from Stacey Burke Trading, and just reviewing last week's initial balance on the end of day markets for May 2016, and just going over the major pairs. And I just want to highlight again the importance of looking at the Monday, Tuesday opening range initial balance, its relationship to the market structure to the left, and how traders can use that to place themselves in the direction of momentum or to be picked up by the market. So the red line here just represents Monday's bar, and just using a couple of simple things with support and resistance, we look at the previous week's low, previous week's high. On the Monday, as I've said to you in the past, very rarely will I ever trade on a Monday. Partly that's because I just feel that it's easier for me to allow the market to trade on Monday. To me, that's the institution showing its hand. Very rarely do we ever get a chance to not enter the trade safely after the smart money has been in the market on Monday. Yes, you could possibly get better fills, but I think the risk that you run is that you will be entering into the market with less odds in your favor, because I think that there is traders that do get trapped entering in on a Monday. There are some situations where there may be some high probability opportunities, but for the most part, I'm going to suggest that letting them smart money trade on a Monday gives traders a safer entry into the market. So we just take a look at the previous week's range, and we see that the market, where it broke out on Friday, the British pound on Monday, trapped traders short, came back into range. Now again, there's three types of situations that we look for. If you remember the 80% rule, 80% of the time a high or low will be established in the first or second time frame of most markets. And there's basically three scenarios that are going to happen. We're going to see the market go sideways, we're going to see it reverse, or we're going to see it continue in a trending direction. So if you think in those parameters, you'll start to understand what we're looking for when we see the market start to establish its initial balance. So in this particular case, we see the market open on Monday, comes back into range. Now this is critical, because if we take this and we just look at this in simple terms, if we have a ranging market, we want to be buying low and selling high. And in this particular case, the market gives us an opportunity. Bears are trapped short, but we're still buying at the low range of this market. We have a range established. If the market breaks out strongly, we have a 1-bar risk, and we're looking for the market to trade to the other side. So if you think of this in terms of market profile, we have two-sided trading. This is the center of the profile. We have an opportunity that if it clears that profile, that it will auction up to the other side of that range. Now, aggressive breakout traders could have entered that trade on Tuesday morning, Asia time. More conservative traders could have also entered in and either went for a limit order on Monday's high, or went at market and just placed their stop below Monday's bar with a target on the other side of the previous week's high. So again, we're just looking at some simple support and resistance. We see two-sided trading. The markets come back in. Breakout traders, we have momentum. It's a beginning of a new week. Remember, traders come to work on Monday, they go home on Friday. So if they come back into the market, they're taking on new positions. Breakout traders have an opportunity for maybe a 2-to-1 risk reward here. 1R risk, possibly a 2R reward. And yes, indeed, the market did give us that entry and trade. Now, we're just going to go over the opening range and the initial balance on a couple of these major pairs. So again, we'll take a look at the Japanese yen next. And again, I just tend to mark off the high from the previous week. The market is up on the Monday, so I will mark off the last bull candle as the market is still inside of that range. Now, on the Tuesday, this buying tail is indicative of a couple scenarios. Either we've used up all the selling volume that was present, or there's selling pressure there, as evidenced possibly from the left, that could have driven this market down. But if we use our 80% rule, we know that if the market breaks that high, it's possibly going to fail there. But because that tail is there, and we know that our initial balance, our opening range, is here, and we're over the middle part of that profile, that's a safe trade to go long. Again, you always want to be able to reference one bar. So if you were long at the break of Monday's high, your stop would go at the low of Monday. Now, just another way to look at this particular trade, we said that the market will do one of three things. It will go sideways, it will continue, or it will reverse. Now we see 1, 2, 3 thrusts, and that's an important pattern to remember. The market will make 3 drives often before it fails. So in this particular case, we know that the market possibly has momentum carrying through on Monday to finish that trade somewhere above Tuesday's high. Now again, that's not the easiest scenario, but again, just keeping your trading simple, we've got a range from Thursday, Friday established. Monday takes us above 50% of that range. A break of that high is a safe opportunity with a 1-hour risk to possibly go to the other side of the profile. Let's take a look at the Canadian dollar. Okay, so again, we just mark off. I'm going to be marking off Thursday's high as we had a breakout that held on to Monday. And we have the previous high over on the left. Now, if you were a breakout on Friday, breakout trader from the pin bar, and Monday's trade closed above the high of the pin bar, Tuesday we have another doji or pin bar set up, and our initial balance is now inside of the first 2 bars of the week. And again, if we come back to our premise that 80% of the time one of those 2 candles will hold as the high or the low for the week, breakout traders can feel comfortable of taking that trade somewhere above Tuesday's high, or if they're aggressive, they may even want to go in at market, and again, a 1-bar stop below Thursday's low. So a fairly conservative with trend trade. You can see we're not using any indicators. We're just looking at the opening range of Monday, Tuesday. Thursday's breakout trade was still valid, so we want to continue with that original breakout and be long until the market gives us evidence that that's failing. Just looking at the Aussie dollar. Thursday, Friday, we had a breakout to the downside. Monday is a bull bar pulling back into range. Again, breakout traders may have went long back into the range from the previous week. But once Tuesday's bar closes, we either need to be looking to go to break even or even taking profits, because when we see that this tail stayed back inside of the middle of that range, this is the greatest point where that trade is now at risk. So again, obviously a lot of downward pressure. I think you got to be fairly aggressive trading that long, but at the same time, as you can see, you were still in some profit, but at this point we want to be going to break even or exiting that trade, as we are now at risk, which we saw the market obviously resume its downward momentum. So again, want to be paying attention to where the last drive has come from. We see buyers have come into the market. We have two-sided trading. There was a vulnerability point here where the market demonstrated that that trade definitely could fail, and we want to be going to break even or exiting that trade. Looking at the euro, we can see that again, downward pressure from the previous week. Very weak rally inside bar on Monday. Tuesday, sold high of Tuesday's bar. We have an initial balance inside of Friday's range. Obviously, trading with momentum, breakout traders, their stops below Friday's low. That was a fairly safe trade, I think, to see low risk retest of Friday's low, and the market capitulated into a new low from the previous month. And we're still in by the looks of this, a fairly weak response from bulls in the Europe market. So again, really important. Initial balance, first 2 days of the trading week, Monday, Tuesday. Sometimes you'll see Monday be a momentum day. You want to look for momentum. You want to look for structure to the left. We want to look to see that one of those first 2 days of the range could possibly hold as an extreme, and try to stay with the original momentum that is price action on the left. Hopefully this helps traders. Keep it simple. Stick with price action. Even if you're using one or two other indicators for confluence, you want to keep it simple so that you don't have analysis paralysis. You want your trading process to be able to be executed simply. Manage the downside, and may the markets go with you. Hope you got some value today. Go back, check it out yourself. Go back, look at your opening range, Monday, Tuesday patterns, look at the previous price action to the left, and hopefully this helps. Have a great day, traders, and keep it simple.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.